Right now, there is credit card legislation being introduced during this lame duck session of Congress that is riling up some economists and lawmakers. The Credit Card Competition Act might sound like it could help you, the consumer, but some financial experts warn it is a bad deal with far-reaching consequences for small businesses and lower-income Americans. Joining us now to discuss is Executive Vice President of the National Taxpayers Union, Brandon Arnold. Good morning to you, sir. Always good to see you. You know, it's interesting because the name itself is very misleading. You know, it's kind of like the Inflation Reduction Act. Certainly sounds good. There's a good intent behind it, and then there's this reality. The idea is to essentially increase competition, but it would authorize the Federal Reserve to mandate what's called swipe fees. And of course, we know how very efficient the federal government is. So explain what this legislation is trying to accomplish.
Yeah, so we're all using our credit cards a lot these days, especially as we enter into holiday shopping season. So essentially what this legislation would do is when you use your credit card, whether you know it or not, the banks charge the retailers as part of that transaction, as transactional fee. They collect a little bit of that purchase as a percentage of how much you spend. And what the retailers are asking here is for the federal government to step in and regulate that transaction fee. And as we've seen time and time again, when the federal government steps in and regulates these types of transactions, it's consumers that end up losing the most, not the banks, but consumers that end up taking it on the chin.
It's interesting because I was looking at some of the routing costs of credit card transactions. Over the past few years, it's been the same. It's been just a little over 2%. So it's not very, very large, you know, when you think about it. The National Taxpayers Union, I know your organization has been studying this legislation for some time. You argue that this will not increase competition. It's going to harm people instead. So talk about the unintended consequences of this.
Yeah, the big concern here is that we'll see rewards programs disappear. So many of us use those credit cards, not just because they're convenient, but because we get those points. We get points for airlines, we get points for hotels, maybe we get cash back. So there's a benefit to consumers if you start regulating these types of transactions. If the federal government gets too involved, we could see these reward programs disappear. So those frequent flyer points that you're racking up so you can save up for your vacation, those may disappear, and that would really hurt consumers out there. Also, a recent study showed the 100 largest U.S. retailers would actually save nearly $3 billion in fees from this law. So clearly they are the biggest proponents of this legislation. Those savings, though, are not getting passed to the little guy, not to all of us. And we've seen this before, right, with the Dodd-Frank Act in 2010, which regulated the debit card industry. It actually killed the debit rewards programs, which I almost forgot there was a rewards program because it's been so long since we've seen that. It also got rid of some of the days of free checking for many banks. Tell us more about that piece of legislation, who introduced that, and why that's significant this time around as well. Yeah, so when we regulated debit cards back in 2010, as you described, what happened was, and debit cards, to be clear, those are usually attached to your checking account versus credit cards. Correct. That are not. When we regulated debit cards in 2010, what happened were those reward programs disappeared, just as we're predicting would happen with the credit card regulations that are being proposed right now. Those disappeared, so consumers again got hurt by this. We were told that the savings that would accrue to the retail community would be passed down to consumers in the form of lower prices, but that never happened. So we want the retail industry to be strong. What we don't want to do is introduce federal regulations that will hurt ultimately both the retailers, the bankers, and most importantly, consumers. And very quickly, it was Democratic Senator Dick Durbin from Illinois who introduced it back in 2010. He's the same lawmaker introducing it again with this new legislation. The bottom line is that you guys say this is going to hurt lower income Americans the most because it was going to act as a backdoor price control. What's another solution do you think would help all businesses serve their customers then? Yeah, we certainly want to help the retail community, especially the smaller ones. I think we really need to look at the tax bill that's going to be brought up in Congress next year. So much of the 2017 tax bill is going to be expiring at the end of 2025, including lower rates for small businesses, including retailers, including the pass-through deduction. That's a big deduction that small businesses benefit from. We need to get the economy back on track. Taxes are at the top of that list to make sure our retailers, our bankers, and most importantly, consumers and taxpayers are in better shape. Executive Vice President of the National Taxpayers Union, Brandon Arnold, thank you for joining us. Have a great weekend. Thanks, Jan.